Welcome friends, this is Ramkumar here, getting you the 31st episode of the Educative series. This will deal with the commentary on IPO of Repono Limited. This company is will be listed in the SME segment of BSE. The RTA for this company is Cameo Corporate Services Limited. The IPO will open on 20th of July 2025 and close on 30th of July 2025. As far as the disclaimer goes, I am currently not registered with any regulator in India like RBI, SEBI, etc. Remaining part of the disclaimer you can read at leisure in the screen in front of you. Now for the remaining part of the issue details, as we mentioned earlier, this is open from 28 July to 30 July 2025. The anchor investors have a window on 25th of July 2025 to subscribe to this issue. The total issue size is 27,79,200 shares. This is a 100% fresh issue. The issue size, since it is an SME segment related issue, it has to be reserved for the market maker. So 1,39,200 shares has been reserved for the market maker. So that leaves the public with 26,40,000 shares to subscribe to. The IPO is a book building IPO, and the rate is from 82 to 84 rupees. Face value for the shares is 10 rupees. There is no employee reservation in this company. Now we look at the register office and corporate office of the company. Both are located in Navi Mumbai in Maharashtra. The book running lead manager, that is BRLM, for this company is Wealth Mind Networks Private Limited. The underwriter for this, that is to the extent of 100%, is Wealth Mind Networks Private Limited. That is the same company. The market maker is JSK Securities and Services Private Limited. Now we will talk about when it was founded. It was founded in 2017. The MD of the company currently is Dibyendu Deepak, and the company is in the business of oil value chain activities, so which involves several activities within the value chain. That is from the time it is got into the country till the time it is finally disposed of by way of sending it to the petrol pump or to the refineries. The objects of this particular IPO is to get money for capital expenses in terms of getting materials required for moving materials from one place to another, which is part of the core part of the business. Second is to do the warehouse management system, a computerized program, to ensure that they are able to manage their warehouse situation much better. The third object is to use it for the working capital requirements, which is quite huge currently because of the business they are in. And the last but not the least is general purpose expenses. Since the SEBI rule says that if the IPO amount is less than 50 crores, they need not appoint a monitoring agency. So the company has decided not to appoint a monitoring agency. The management will take a decision on release of funds that is received through the IPO. The CAGR of the Indian market for this industry is predicted to be 15.64% from the year 2022 to 27. The company expects it to also to grow in the same fashion. This is a forward-looking statement. To that extent, it has to be taken with a pinch of salt. Now, if you look at the financials, we will look at the financials for the 3 years, 23, 24, 25, in terms of revenue, profit, and total assets. The revenue is 13 crores, followed by 34 crores, followed by 59 crores. So if you see the year between 23 and 25, there has been a 74% increase. At the same time, the profit is 0.52 crores, that is 52 lakhs, followed by 4.18 crores, followed by 5.15 crores. So here, the increase in the said 2 years, between the said 2 years is 89.90. It's almost 90%. The total assets for the same period is 7.68 crores, followed by 17.65 crores, followed by 25.87 crores. So again here, the increase is about 70%. The earnings per share, that is EPS, is rupees 541 paise. This is using the usual method of weighted average. If you look at it from the point of view of the price of the shares, that is a floor price and upper cutoff price, The lowest PE or the profit earning ratio would be 16.82 and the highest would be 17.74. Now look at the various factors which will affect the company's profitability or ability to make profit. Basically, it is government, regulatory policy, tax and tariffs. So the usual trade restrictions and anti-dumping would be applicable for this company too. The exchange rate fluctuation is an important aspect here, as they would be getting the crude and the other activities from outside of the country. The last is the rules and regulations issued by the government of the central government as well as the states where this company is operating from. The most important risk is the political turmoil or political upheaval in the areas where they are operating in, and the labor strikes, since they will be heavily dependent on the laborer workforce to ensure that they are able to complete their job, which is within the value chain of the oil trail, from the time they are imported till the time they are reaching the final destination. Any downgrading of the rating of the country, that is India, would create issues for the company in terms of higher profitability or lower profitability, depending on whether the downgrading is it is a downgrading or upgrading of the rating for India. Last but not least, the inflation would definitely affect the company, as inflation affects everybody else. There are no special tax benefits to this company for the activity that they are doing currently. In terms of litigations, there are 3 litigations against the company or its management or its promoters or promoter group or KMPs, that is key management personnel, totaling to about rupees 30.84 lakhs. The debt equity for this ratio is quite good, with 0.31 in 23, 0.39 in 24 and 0.43 in 25. So this is a lean company in terms of raising of debts for managing their capital requirement. As far as the revenue is concerned, 95% of the revenue is coming from within the country, that is India. The remaining would be other countries. There are 3 or 4 countries where the company is operating in, the Singapore, US, etc., where the remaining 5% comes in. So any changes or events occurring outside of India would not directly be impacting this company, except for the oil price or ability to get oil within the country. The top 10 customers of this company in 23, they contributed 100%, 24 98.6%, and 25 96%. To that extent, this is heavily concentrated on these 5 customers. So the company is having a concentration risk. Another point is that the company is operating in 3 states mainly, that is Karnataka, Punjab and Gujarat. So any issues in any of these 3 states can create issues, as they are contributing to 86% of the business within the country. The top 10 suppliers again contribute a very high percentage, 98.74 in 23, 100% in 24 and 96.76% in 25. So more or less every bit of revenue and every bit of raw material is obtained from the top 10. So the concentration risk on either side is very high. As far as lease and rental is concerned, they have got 2 warehouses, one in B1D in Maharashtra and another is in Kutch in Gujarat. Both of them are on lease and rent basis. As far as the office is concerned, the office is in the own premises of the company, which is in Navi Mumbai in Vashi. The company is claiming that they have taken secured loans, and any demand from the person who is given the loan of getting back the money could create issues in terms of maintaining bottom line. The cash flow the company says is negative. The quality is to be kept as the most important aspect, because they are dealing in highly inflammable liquids or business which involve this type of activity. So failure to maintain quality could create a huge risk as far as for manpower as well as for the finances of the company. Hence, the operation needs to be smooth, following policies in which are laid down by the company, and quality to be maintained. As far as conflict of interest goes, the companies, there are a couple of group companies which are in the same business, so there is a heavy conflict of interest. Additionally, there is no non-compete clause signed with either of these two companies. If you look at the insurance, they are claiming that the insurance is adequate at that moment, but it could be inadequate at various points in time, as the insurance itself is being reviewed periodically. If you look at it, agreements, there are no long-term agreements with the suppliers or with the customers. There was an a bonus issued on 24th of July 2024, that is a pre-IPO issuance, and this was issued within 1 year of the IPO prospectus being released. Now, as far as non-compliances goes, there are heavy non-compliances, mainly with respect to ESIC, where the non-compliance ranges from August 23 to March 25. Similarly, in professional tax, they have been really inadequate in terms of not being able to file the professional tax in terms of money from November 24 to March 25. So if you see, the company has been non-compliant on these two aspects, which is worrying as far as the investor would be concerned, because both are money related and both are related to the employees who would be logically forming large percentage of the workforce of this company. We have summarized the RHP and placed it to you for your perusal. This is meant to be purely an educational exercise to make the viewer aware of the pros and cons of the financials and the strengths and weaknesses of the company. In light of the above, there is no reference to the correctness or otherwise of the price on offer, prevailing grey market price, possibility of listing day earnings, etc. Should you like this video and find it informative and educative, kindly pass it on to your friends and relatives. Please press on the like button and subscribe to this channel. Should you have any doubts, queries or suggestions, please contact ramkbharosay@gmail.com. Thank you.